Good morning, everybody. Thank you so much for joining us on this very special iteration of the Gentian podcast. So I haven't hijacked it completely this morning as I have in the past, but Ken has handed over the keys to me. So we are going to have a supervised presentation today as we run through our regular stuff. So we've got beautiful weather here in Wisconsin. Hopefully from wherever you're joining us, it's beautiful there as well. But how we always go with these podcasts, we start with going big. So something that I'm grateful for, of course, grateful for the opportunity to come to you live today, but grateful for my mother. She is retiring this month. So it's about time. Honestly, it's one of the greatest joys of my life has been able to be the one assisting my parents with things, to be able to have things kind of not really come full circle, because I'll tell you what, when I'm back in Wisconsin, they still love picking me up from the airport, let me stay in their basement on occasion, things like that. But to be able to help them with their own life events, it's been truly a blessing. So I'm grateful for that opportunity and grateful for her to retire. So Ken, what are you grateful for?
Yeah, thank you, Mike. I appreciate that. Good to be on the podcast with everybody. Sorry about my voice, a little scratchy today. But back in 1972, I didn't realize how much I loved Alice Cooper and the song School's Out for Summer. So grateful for another 1 day, 1.5 days of my children being in school, then they're out of school. A whole new routine starts for those 3 months or so. So just grateful for Alice Cooper blaring in my car in a day and a half. So thank you, Mike.
Excellent. Thanks, Ken. You have a great polo on, by the way.
Yeah, you too. Hey, you got the memo. You got the memo.
Absolutely. Absolutely. I actually read my messages. Zach, what are you grateful for?
Yeah, thank you. Speaking of family as well, I'm just grateful for the opportunity to continue to watch my son grow and learn. And the last 3 days, when I've gotten home, as he's gotten more mobile, he hears the door, he looks up, gives me the biggest smile, and starts army crawling as fast as he can to me. And one of my clients once told me that everyone can prepare you for the very difficult times, the lack of sleep, the various grouchiness that he might have, but no one can prepare you for how great it is when it is greater. Those things happen, and I completely agree with that. So just grateful for the opportunity to continue to watch him learn and grow every single day.
Exactly. Someday I'm hoping to experience that myself. So if you ever need a sitter, I mean, I might not be the right person for that quite yet, but someday. Michael, your hair looks amazing today. What are you grateful for?
Thank you, Mike. Well, apparently I didn't get the light blue polo today, so we're gonna have to talk after the webinar this morning. But grateful this morning for connections and relationships. The nicer weather just seems to lift everybody's spirits and mood. It just gets people in the mood to go out and spend some time together. So been taking full advantage of that, and some warmer weather on its way as well.
Cool. Excellent, Michael. Ken and I match, and you decided to match the wall behind you. So nothing wrong with that. Ashley, what are you grateful for?
Thank you, Mike. I'm grateful coming off of a great birthday week last week. Thank you to all of the clients and friends that have reached out. It means a lot. And I got a great day celebrating another gorgeous day just like today. So I'm just grateful for that.
Excellent. Excellent. Wrapping it up, we have Julie. Julie, what are you grateful for?
Thanks, Mike. With Father's Day being this Sunday, I'm grateful for the dads in my life. My dad was a great role model, loving and kind and supportive, and passed a number of years back. I miss him a lot. Grateful for my husband, Doug. He's been a great dad to our 4 boys, and he's my rock. And lastly, grateful that I'm able to watch my boys become dads themselves, kind of grow in that role. So I'm a really proud mama bear. So
That is so wonderful. So I hope my mom feels the same way about me, honestly. But we have a great show put together for you guys today. Our big topic is going to be mid-year planning, but what we're going to kind of get into to start things is Zach's going to talk a little bit about the markets. I'll touch a little bit more about how things are moving, and throughout we're going to bring in these mid-year planning exercises and talk about some of that stuff in that regard. So very interestingly, we've seen the markets recover. We've had a correction in the beginning of the year, and we've watched that come almost all the way back to all-time highs. But regardless of that fact, we're seeing markets being right around that just above positive mark, and we're seeing diversified portfolios outperform. So it's wonderful to see that and just remind us on why we do what we do over time. So I'm gonna toss it over to Zach. Zach, how are markets looking?
Yeah, thank you, Mike. Really appreciate it. And we'll just run through the markets year to date as they've been, and also kind of just touch on the recovery that Mike talked about since mid-April, and then just a few kind of budgeting and personal finance options as we hit mid-year here. So the Dow Jones just up under 1% on the year, 0.76. The S&P 500 is 2.67, which is a 12% recovery since the middle of April. The NASDAQ is up over 2% on the year as well. That's a 16% recovery. As a reminder, the NASDAQ is 50% weighted towards technology, so that's where a lot of the recovery occurred, and also where the initial correction occurred in middle of April as well. Where Mike touched on the diversification and asset allocation and how well it's really working this year. International is actually up 16.2% and 11% since the middle of April. And emerging markets, one that has lagged behind significantly over the last 5 or 6 years, really pre-COVID, if you will, about 12% positive on the year and 11% return since the middle of April as well, since April 16th. As we go through the markets, I just wanted to touch on a reminder. All of you are great investors and understand this and have seen this over a long period of time. However, we had this really negative feeling towards markets, and a lot of reports were coming out, oh, S&P target reduced by 20% on the year, have this massive recovery, and now we're seeing a feeling of exuberance again, of, oh my gosh, look all the opportunities out there, look at how many things have grown over the last month and a half. It's just kind of a reminder to stick to our tenets, the faith, patience, and discipline. That we had a long conversation recently about price and value and how they actually work opposite of each other, that when prices are high, value tends to be a little bit lower, the value of that company. Whereas in middle of April, or when we had that really sharp correction with the tariffs and the trade wars in the beginning of April, prices kind of reduced and value soared at that time. So we always kind of look at the difference between price and value, and we really stay patient. And it's kind of with Warren Buffett retiring, it's always the idea that when others are fearful, that's when we want to be greedy, and when others are greedy, we want to be a little bit more fearful, a little more cautious. So just a great reminder of not to get caught up in the emotions of the markets and of media. Hopefully we're not digesting any media in general, but just to be aware of that as we continue forward. Just touching on just a few mid-year items. I had the opportunity recently to talk through budgeting and finance and go through a presentation on it. It's just a great reminder of is our budget, whether we're in retirement or still working, aligned with our overall goals? Has anything occurred to start this year that maybe shifted us off of that path? Maybe there was an unexpected thing that occurred in our home, or something health-wise that came up. It's a great time to sit down and reevaluate. Is our budget aligned with what we originally put together with our financial plan? Is there any adjustments that we need to make? And also, is our emergency funds balances reflective of those expenses? Did we have to tap into those? Is it at a good place? And maybe it might be in a very robust place where we can search for opportunities above and beyond what we're receiving in our savings account, which we've been hearing, unless you had a high yield savings account somewhere through a local bank, generally the savings account at the bank is less than 1% is what we're hearing. So there might be an opportunity to still continue to look at money market ideas that are over 4%, or even if we're in a great place with our emergency funds, maybe looking at investing that towards the long term as well. With that presentation, I kind of gave an outline of what the world tells us our guideline should be for budgeting, and it's really a 50-30-20 rule: 50% for needs, 30% for wants, and 20% for savings in some form, whether it's long-term or that emergency funds. When I talked through that with these group of individuals, really talked about flipping that instead of starting with our needs, wants, and then savings, starting with our savings first, then going into our needs, and then our wants. So it was just a great reflective time. And also, speaking of savings, Ashley has some great ideas for us on how to do that this year as well.
Thank you, Zach. Yes, I bring to you today a mid-year savings consideration. So I'm going to go ahead, share my screen so you can all visually see what I'm going to chat on here. Just don't forget to use those cashback apps. It is free money if you're going to be doing your normal spending and your normal utilization of credit card usage. So again, it's a good time. Use that free money back when it comes to credit cards, because remember, Christmas is only 6 months away. And what a great idea to go look at that credit card statement and see that you have a few $100s in cashback rewards to utilize. So, and a reminder also to just consider buying off season. So right now is summer. Consider looking for Christmas decor, gifts. Those are all going to be on sale or very discounted still. And then again, of course, spring and fall, just being mindful of when you want to buy certain items, because you can get really good deals on them when they're off season. As a reminder, everything can be negotiated, or lots of things can be negotiated when it comes to insurance, phone plans, internet providers. Ask for those loyalty or retention discounts. They are there to be used by a lot of these companies. You just have to ask. So just a reminder to not be afraid to negotiate. And of course, you can always shop around. One provider might not be offering you something, so don't be afraid to change providers in order to save some money. DIY products. When it comes to cleaning supplies, home decor products, as well as outside weed control items that all of us are considering and buying right now for the outdoors, there's a lot of great DIY recipes out there online. You'd be surprised what you can do with some dish soap, some vinegar, and a little bit of baking soda and essential oils. So look at some ideas online in order to save some money on those products. Did you know that if you decrease your water heater from 140 degrees, it's on your setting in your basement or wherever your water heater is, to 120 degrees, still have plenty of hot water, you can save over $50 a year. So just a very simple did you know, and something to consider for your home. And then of course it's flexible savings accounts are, if you don't use them, you lose them. You're 6 months into the year, so just a consideration to use up that FSA money and not let it go to waste, of course. And I will turn it back over to Mike. Thank you.
Excellent. Thank you, Ashley. Yeah, someday I hope to have a water heater of my own that I can turn down. So I'll write that one down. I'll keep it in my back pocket. Interestingly enough, we're starting to actually see more homes up for sale. And I think that's something that could be indicative of more opportunity for millennials like myself, those that are out there, to have that time to look towards buying their first home or looking around for that. So we'll see what happens. It's been a very, very competitive market with the cash on the sidelines, the ability for others to be able to buy these things outright, and then some of the big corporations across America buying up a lot of the affordable housing, giving others less of an opportunity to buy for themselves. So we'll see how all of that kind of shakes up. Something that we've heard over time is that millennials are not spending, they're not buying houses, they're not having kids. Well, in fact, recently at a Raymond James conference, I've actually heard that stat's starting to change a little bit. So shout out to Zach for having a child, breaking the mold there. You know, it's a goal for a lot of people. We get to talk to a lot of individuals, including a lot of your children. Some of you might actually be on this who we have this conversation with. It's a goal to start a family. So don't discount that. We're just a little slow to getting to that point. But one of the other things that I want to talk about, Zach talked about the excitement in the market and how that's kind of pushing things upward right now. And very much so. We look at times of actually being the opportunity being when and sentiment, if you will, about the market is at the absolute lowest. Let's be cautious when it's high. Also, it's one of those things that the best time to be an investor is when you have the money available to invest, correct? But we do want to just be cognizant of some of the things that are going on in the world. This is not by any means a reason to not put long-term dollars to work. Anytime you don't need your money for a long-term period of time, it's a good idea to evaluate putting a little bit more in the market itself. But so what's pushing markets higher actually? So there's a lot of weak expectations by analysts right now. A lot of things are getting revised downward. And when this data is coming out, it's actually showing to be a positive to what's a very pessimistic market at this point in time. Data has been cooling beneath the surface, but not to the extent expected. And the one shining star right now is labor markets. Labor has been resilient to this point. And when those good prints continue to come out, it gives a good expectation of what could happen long-term. So right now, the Federal Reserve is very patient. They have this tool in their tool belt, of course, that they could lower rates at some point in the future. So if we do continue to see cooling conditions, there is an expectation that they will. Right now, it seems like that expectation continues to be pushed further out. So don't ever be surprised at how resilient the United States economy actually is when we see terms like this. But we do want you to be prepared. We're going to see another 20% downturn at some point in the future. I left my crystal ball at home, so I can't tell you when that will be, but we're going to be ready for it when the time comes. So getting back into kind of the mid-year planning stuff, we're a couple months removed from taxes getting all taken care of. Things are kind of slowing down a little bit when it comes to, that to-do list. A lot of things happen at the beginning of the year and at the end of the year. This is a great time to prepare yourselves for what might happen later in the year. And a good way for us to help you do that is by sharing your tax returns. Why? So that we can see what your tax scenario was like last year and get ready for that time in the future that we could make a decision to do a Roth conversion, to do some tax loss harvesting, to save ourselves some money in the tax standpoint. And it's easier to be prepared, get that action plan in place by bringing that to your meetings when you may be seeing us in the next month or two. If you're not, feel free to be proactive, reach out, let us know, and we can put it on file and we'll be ready. Another thing that I want everybody to consider right now is it's a great time to always revisit your estate planning. When you're thinking about the fact of a lot of travel, a lot of things happening, people moving around, sometimes it's great to just remind yourself that let's make sure that everything's up to date, everything's in place. We protect, and I shouldn't say protect, but we help against the unknown, right? We want to mitigate all sorts of kinds of risks. And so estate planning right now, without so much going on, might be a great time to just think about all the life events that have occurred, everything that's happened before, and just see if that's up to date for you right now. So to expand upon some of this mid-year planning opportunities, some of the stuff that's going on out there, I want to bring Ken in. Ken, what do you have to share?
Thank you, Mike. I appreciate that very much. And I'm going to talk about 4 things today: tax planning, cash flow, fall semester with college coming up here pretty quickly. And also, Mike kind of touched on estate planning, so I'll probably leave that one away. But tax planning right away, let's get into it. Quarterlies. Thank you, Ashley, for the reminder. Quarterlies are due June 16th. So if you pay quarterly estimates, those are due June 16th for the second quarter. So just be aware of that piece. Make sure you don't miss that piece there as well. It also kind of leads into mid-year planning. How are things going? Are we withholding enough from our IRAs? Are we withholding enough from our Social Security, our pensions, maybe even our working wages? So if last year was a scenario where we had to owe a little bit of money at tax time, that's not the end of the world, of course, right? But if we owe too much, then we get an underpayment penalty, and that's where it's not so good anymore. So reevaluate where your income is this year. Reevaluate. Do we need to make those quarterlies? Do we need to withhold more taxes to make sure we get a little closer to that 0 mark at the end of the year? So sometimes what happens is people are under withheld, then they get an underpayment penalty, and then all of a sudden the shock comes come tax time, and they're like, wasn't really expecting that. So here's a good time mid-year, check in on it, because maybe the first half was a little light with withholdings, but we can make up for that in the second half of the year as well. So kind of leads into cash flow a little bit too. Sorry for my voice, a little raspy this morning. I was singing too much Alice Cooper this morning, apparently. School's out. No, I'm just joking. For cash flow, how's our spending? Is it one of these years where it's a little bit more? Is it a little bit less? Things change. Like if we go through a knee surgery or something, or a knee replacement, next thing you know, we didn't take that 1 or 2 trips for the year that we usually would have. So maybe our spending is down a little bit because of things like that. So just keep that in mind to see where we're at with that, because that leads into opportunities. If you show and spend less money, obviously there's more opportunities from a tax planning standpoint that we can help you out with from a tax bracket management standpoint, 12% bracket versus the 22, for example. Just one thing that comes to mind when it comes to cash flow. Fall semester is here, my friends. If you have any kids or grandkids going to school in the fall, tuition bills, to my knowledge, are coming due right about now. So this is a great time to take a look at your 529 college plans. Take a look at those other accounts that you've been saving money for this moment. Take a look at the risk. Take a look at the allocation. If we need money from them, great time to take some money out of college plans right now to get those tuition bills taken care of. With the markets being in a pretty good spot, those college plans are also probably in a pretty good spot as well. So keep that in mind. With that being said, back to you, Mike.
Thanks, Ken. And to reiterate some of the things that he went through, when we say take a look, we've always been watching over your shoulder, making sure things are taken care of. Regardless of the time of year, we are making sure that accounts are watched, markets are taken care of, and everything is happening according to plan. So bring these concepts up, though. If this is something that you have question about, if these apply to you, please reach out to us. I mean, that's what we're here for. It's a wonderful time of year to just revisit, get a meeting on the calendar, even if it's outside of your regular schedule. Let us know. We're happy to help. Michael, what do you have to expand upon some of these mid-year planning thoughts?
Thank you, Mike. Just want to add a few other things in. Looking at insurance, if you have life insurance, what's changed in the past year or handful of years? Do you have more people relying on you financially, kids, grandkids? Do you have a policy that maybe towards the end, like a life insurance policy, it's towards the end of the term that might not necessarily need anymore and could save some money? It's something great to take a look at and talk to us about. Of course, homeowners and auto policies. I'd be surprised to hear that nobody or anybody has not seen a rate increase. It's good to shop around and check for savings on those items. If you are planning on retiring in the next year or next handful of years, it's a great time to take a look at your retirement plan through your employer, review those investments. We're happy to take a look at those with you as well. Get some updated information on any pensions you may have, as well as Social Security. With the Social Security Fairness Act, a lot of public employees are seeing a big boost in their Social Security benefits. And lastly, something that we've talked a lot about in the past, but practicing that retirement budget is extremely, extremely important as far as budgeting goes, to make sure that it is realistic and you can stick to it. Looking at some debt, focusing on some of the higher interest debts, of course, because interest rates move. It's always good to take a look, review those items and talk with us about it. We're happy to help, as well as employer benefits. If you have restricted stock units, if you have the opportunity to participate in the employee stock purchase plan or have other stock options, check the vesting schedule, check the tax implications, talk with us. You can review some of those deferred compensation items, other elections or tax withholdings that you have set up on those during mid-year enrollment periods. So we're happy to review a lot of that with you, take a look at those and make sure that it's going according to what your plan states. So thank you, Mike.
Yeah, absolutely. And thank you, Michael. And I can't reiterate enough, help us help you. If you see a meeting coming up, one thing that you can do that's wonderful, get us that tax return, get us some of this information that you may have digested throughout this that you want a little bit more us to expand upon. Whenever we have an agenda to work off of course, we're going to have our own to go through things, but we want to make sure that we address all of your questions. So bring them to us when we send you those Calendly links, when we schedule those things the old fashioned way. We're always open to adding what your agenda items could be. So before I bring Julie in to talk about what's going on at Gentian, I kind of want to talk about what's mid-year planning look like at Gentian, right? We're on the topic about your scenario specifically and your strategies. What's ours? So actually later today, we and Julie will be sharing this. We are doing one of our monthly team building days, our learning to serve you better days, if you will. And this one is specifically titled mid-year planning. So if you wonder where the topic came from for today, here we are. Anyways, so some of the things that we're looking at mid-year, this is a great opportunity for us to reevaluate our own technology. So you've heard us talk during our last forums. Maybe you've had a meeting with us recently. We've started to use some really cool note taker called Jump.ai. And this is going to help us be more present in our meetings. It allows us to not have to scribble everything down, whatever that is. Of course, we're still going to want to take some specific notes and have that conversation. It's our job to do so. But Jump.ai is an assistant that we can bring in to help us be more present. It will take a transcript and be able to help us then finish up those notes and maybe catch a little bit something that we may have allowed to slip through the cracks on the way. Nothing financially wise, of course, but we are just trying to do our very best at the end of the day to serve you. And this is a technology that we're starting to utilize. Other things that we recently did, updated our phone system. So this was a great time to be able to take in some new phone systems, be able to add a little bit better of an experience. I have no idea what the hold music sounds like. If you don't like it, tell us. But we're going to hope to keep you off of hold as much as possible, of course. So, and then the last thing that I want to bring up is that we're looking internally at portfolios. Right now, Ryan is digging deep and looking at some of these different things. Raymond James has their own recommendations that we want to make sure that we always have our clients and our own money invest in the best things ever. And we take the best strategies that we can and the things that we put together. When I say best, that's all subjective, but we do the research behind it. We're looking internally at the portfolio. You might see some changes coming up. It's something that we make a decision by committee. We move slowly on these changes, and that's deliberate because we hire great managers to help you. When I say hire, we invest in mutual funds with great managers, great ETFs, and make great decisions around those stock picks that we do as well. So constantly reviewing that. It's a great time for us to do so and go a little bit deeper, especially when things come up. So we may have a special guest here, but before we get into that, I'm going to go ahead and have Julie run through the happenings quick.
Thanks, Mike. Yeah, we do have a few events here over the next couple of weeks here at Gentian. As Mike mentioned a little later this morning, our office will be closed from 10:30 to 3 as we learn to serve you better. So we will respond to any emails or calls after that. And Sunday is Father's Day. So we wish every father out there a happy Father's Day. Enjoy the day with your family. The June Birthday Club is Wednesday, June 18th. The doors open at noon. So please RSVP by today if possible. If you are able to join us, if you missed May's or can't make July's, you're welcome to come here in June. But please RSVP by today if possible so that we can plan accordingly. Our office will be closed Thursday, June 19th, as we observe Juneteenth Day. So we will reopen on the first day of summer, which is Friday, June 20th. So we're looking forward to that. Our next bi-weekly podcast will be Wednesday, June 25th, the topic being social security, what you need to know, what are myths, what are facts. So please join us for that at 9 a.m. And that same day will be our second annual, I think, Kids Finance Camp at the Doty Farm from 9:30 to 12:30. So if you do have children or grandchildren between the ages of 7 and 14, please register them. It should be a real fun event, and lunch will be served. Then just a couple save the dates. July 23rd is our next Ladies and Gentian event. More info to come on that. Our next Health and Wealth webinar is August 27th on muscle medicine. And our shred event is September 8th at the Doty Farm, also from 11 to 2. So please register an RSVP for any of the events that you're able to join us. We really look forward to seeing you at some of those. So back to you, Mike.
Thank you so much, Julie. And so to close this out here today, I do want to bring in a special guest. Well, he's special in our eyes. We almost made it through an entire dad joke free episode of the biweekly podcast. We'll see if that will continue. Chris Doty, everyone.
Well, thank you, Mike. I think I'm a dad joke just in and of myself. So thank you for having me on here. But as talking about budgeting, I was working my budget, so I ran a little bit over at my previous appointment, which I wanted to make sure I was really heavily working on budgeting for both, us, the firm, and I'm just messing with you. Outstanding working that as well. It's a fundamental piece of what we do. So I think when you look at it, if you look at budgeting a couple different ways. As a teenager, it's interesting. As an adult, you start to get real. As a retiree, it becomes essential. So it's a 3-stage event as you go through. I'll try not to enter the dad jokes because, of course, it's spring and there's all sorts of fun dad jokes, but I won't enter those because they're quite funny. We did get to honor one of our great clients yesterday as a pillar of the community. So I guess he's an architect. His name is Steve Peterman. He was Mequon, Thiensville's pillar of society. So I guess the one dad joke is, this kind of came from that as well. They said that Rome wasn't built in a day. That's because Steve wasn't there. So I'm going to throw that one out to Steve as well, because he's an architect. He'd have done it. But at any rate, I had to throw that one in there. Thank you. There's a lot going on this summer. The beautiful thing is summer will start at some point in Wisconsin. If you're somewhere else, maybe it started for you. We hopefully are kickstarting it today, but then tomorrow it goes back to spring or kind of a early winter again for about a week. but it's kind of funny. The key with us is persistence, patience. There's a lot going on right now. We've got some new writing that we'll be doing as well, talking about some of the fundamentals, which you've heard before, but I think the fundamentals are essential. So I want to just join the webcast today. Thank you guys for running this. I know it's a wonderful one as well. A few dad jokes are there, but I want to thank you all tremendously for the introductions you've been offering us. I think bringing us your friends, family, and those that you would be proud to hang out with and have time with in retirement. We've really had a wonderful, wonderful introduction session to many of your friends and family. We appreciate that. It's what keeps you guys as growing and number one. I think just recently, according to Shook in Forbes, we were listed as 4th in Milwaukee after 2 brothers who inherited a business from their dad and then one other. So this is you, by the way. We were listed that because of you. I want to make sure you understand that. Thank you tremendously. Whenever you see those rankings or things come out, you should be proud of those because it's your trust in us that makes those occur. With that, I want to just say that's my gratitude for today. I offer that to you as well. Let's have a great rest of this spring as summer hits a few days now and then, and actually as it goes into summer. So from our galactic headquarters, Mike, thank you for bringing me in here and letting me speak. You know, the old guy. Sometimes they don't want me to speak whatsoever. It's like, yeah, dude, you talk all the time. We're good. We got this one. But I want to say from our galactic headquarters here in Mequon, Wisconsin, this beautiful 84-degree day today, which is summer. I want to thank you tremendously for your time today, for watching, for really trusting us to be your advisors as well as we dedicate ourselves to you and having a better life as much as we can help you out. Thank you tremendously. Have a great week.